I went back and I reviewed something, and it's a strategy that you talk about. It's incredibly simple, incredibly simple.
Hmm.
It's putting the 10 period simple moving average on a monthly chart. I was looking at Bitcoin,
Yeah. Yeah.
and you were saying, and you've said, if you want to be ultra conservative, you only trade to the long side. So
That's
when
right.
price dips below, you just stay out of the trade on the sidelines. You're waiting for a move above. If
Correct.
you had just done that on Bitcoin, you would have caught most of the big moves.
Yeah, and you can say that for most markets, most stocks, et cetera, on the monthly time frame. It does work very, very well. Um, and reason being, if you're above the 10, it means there's some sort of movement to the upside. For price to remain above the 10, you got to be moving higher, and same thing lower. And so the trick is not to get caught up in the news or the excitement, which is difficult. We're human, so we're going to feel those emotions. But that's the problem. When you get a rip like this and you hear people coming out with targets of 500,000 a coin or $1 million a coin, and you're at 60,000, you're thinking, boy, I'm just going to sit tight and let this run. And then, of course, we get that rip against us because of the lack of support that's left behind. And you give it all back, and then you end up spending months, if not years, trying to recover that position. Whereas if you just, look at that. On this particular market here, you know, the bar colors, uh, I don't have victory on here. So the bar colors are just the regular bars, right? All I have is the 10 MA. But if you look at where the first time it closed below the 10 MA was right up here, right? Certainly not at the top, but certainly not, back down here. You kept most of those profits. If you wanted to go short, you would have done very well. You would have actually covered near the low. But the idea is not, when you're managing money and you're using this strategy, it's not to go short anyone's money here. It's just to get out in cash, put it to work somewhere else where there is a trend above the 10. And then when it recovers, you're getting back in. And so if you look at this run from here, let's say you had gotten in down here, we're talking about what, near 10,000, let's call it 10,500. And, the absolute top was, of course, 69,000, right? But we would have gotten out around 46,000. So let's say we would have made from 10 to 46, or 10 and a half. So say about 35,000, right? Now you're getting back in at 23, 24 here, and you're riding it back up to 60. So most of this move here, you would have made again a second time here. So when you add up your profits from there, the 35 from here, and almost another 40 now, you're actually, that's 75,000 right there, right? So more than had you gotten out at the absolute top from here. You got in at 10,500, got out at 69. That's less than the 75. And we're not even back at the top yet. So by the time it gets there, you're making even more. You'd be up about 85 thousand in total. So that's the idea behind this. And it's also great if you don't have a lot of time to devote to the market and you don't want to stress over things. That's the way you play it.